Well, good morning, everyone. Good morning, everyone. It is Monday, last day of March 2025. It is so good to see you all this beautiful and amazing Monday morning. Lots to go over this Monday. Y'all, it is amazing what's happening with the market. So I am really excited that you joined us for our Monday touch point. We're going to go over the single best leading market indicator available for the entire area. That's going to be the new listing to pending ratio. We're going to take a look at all of the available inventory and what is going on within our specific market. We're going to go over the bond market. You can see right there behind me, we are starting the day on a really positive note when it comes to the bond market. We are looking at a drop in the yield, which is very encouraging, especially with a little bit of an accelerated inflation number that came out on Friday. It is encouraging to see a drop in the yield. So that is really good. That's positive. We do have Robert's updated rate sheet, and that's going to show a slight decrease from Friday. That's also another really good and positive move that we've noticed within the bond market within the 30-year conventional fixed rate. But as you know, we are going to start by updating that amazing and famous new listing to pending ratio. I am really excited to see what in the world is going to happen with this ratio because we are noticing a pretty dramatic increase in inventory. When I say dramatic, it's borderline eye-opening. So really look forward to seeing what it's going to come out at, especially for this past week. Let me go ahead and just do a little bit of a cleanup right here on my end to make sure that this sheet is ready for you. And we're going to update not only this past week, we're going to make sure that we update the previous week, but then we're also going to do a month to date. Take a look at the entire month of March. Let me go ahead and share my screen with you to make sure that you've got access to everything. Let's go ahead and just get this all shared. Okay, good stuff. Here's my screen, and let me go ahead and just put the new listing to pending ratio. Let me just adjust it right here just a little bit for you, just to make sure that you've got access to absolutely everything. And let's see right here. Okay, perfect. Let me just put this down. Great. So now we've got our weekly new listing to pending ratio. You can see that we're going to update from March 17th all the way through March 24th. We're going to take a look at the historical pending because you know that at 11:59 a.m. or p.m., 11:59 p.m. on Monday, the new price increase, price drop back in the market, active under contract, it all locks in. But pendings, the agents can update the pendings for quite a while, and oftentimes we'll spend weeks updating the pending information. And right now we're going to increase the pending from 462 to 469. That is going to increase that ratio to 0.73. And what that means, a really quick recap for all of us, is it's a very simple ratio. It simply takes everything that is new on the market plus everything that is back on the market, divides by everything that is active under contract and pending. If the ratio is under 1, that means that less properties went under contract in relation to new inventory. So for example, at a 0.73 ratio, it would mean that 1,000 properties came on the market and 730 properties were absorbed by the market in the form of active under contract and pending, which means that over time inventory goes up. If the ratio were over 1, let's say 1.25, that would mean that 1,000 listings came on the market and 1,250 listings were absorbed by the market. In that case, well, then inventory would actually go down over time, simply because more is being drawn from the market in relation to what's available in the market. That is why this ratio is so incredibly powerful, very simple, yet very powerful. We've been able to track the market for many, many years relying on this specific ratio. Let me go the week before that, from the 10th to the 17th, we're looking at 562. Let's go the week before that, from the 3rd to the 10th. We are looking at 503. Great. So everything has been updated now, moving backwards. Now we can update this specific week and let us see what is going on from the 24th to the 30th and number of new listings. We are at, so far, 1,340 new listings. 1,340 new listings. Previous week, 1,261. Before that, 1,440. We're at 1,340. Where are we? I'm going to double check the previous week. That seems so low. Yeah, no, 1,261. That's completely accurate. Yeah, so we're at 1,340 right now. Where are we going to land? We tend not to see a lot of new listings come on the market on the last day of the month. I can expect that number just to be shy of 1,400. As a matter of fact, just so far today, if we just look at today, we've had only 22 new listings came on the market from 12 a.m. today up until now at 10:06 a.m. So in 10 hours and 6 minutes, only 22 new listings came on the market. We're going to be shy of 1,400, maybe around the 1,375, 1,380 mark. Now let's take a look at price increases. We are at 119 price increases. That's a low number, isn't it? That right there is the lowest number going all the way back to Christmas week. Wow, check that out. 119 price increases. We have to go all the way back to Christmas week to get a number of price increase that is lower than that 119. What about price decreases? We are at 1498. Ooh, there's that 93%. That is going to be a really high number. We have to go all the way back to October 14th, all the way through October 21st to get a number that's higher than 93%. That was 94%. 93%. If we take everything that's gone up or down in price, the percentage that went down in relation to only what went up and down, 93%. Let's take a look at back on the market. What are we at here? We're at 189, 14%, low number. Let's take a look at everything active under contract. We're at, okay, well, you know what? Not bad. 532. Now, you're going to get to guess. I need 5 guesses for pending, you all. You know the drill. You've done this before. I need 5 guesses on the number of pending. I have no idea what that number is, so go ahead and give me 5 guesses. I will read out the 5 guesses. Go ahead and give me the 5 guesses. Okay, we've got Austin Bishop coming in at 292.5, followed by Anai at 330, Harold at 250, Jason at 405, Seth at 249. We've got Charmaine at 266. Sonia closing us out at 267. Let's take a look at it. Oh, we've got some really close ones right here. So who came in? Okay, we've got Seth at 249. We've got Charmaine at 266. Sonia 267. Bertina 200. Sonia's going to take the prize on this one because it's coming in at 269. Wow, 269. That's going to put us at a 0.52, starting the week off at a 0.52. Which means that we're not going to beat the last week, which is at a 0.73. We're at only a 0.52 right now. That's a pretty low ratio going in, really closing off the quarter. We're closing off the quarter, we're closing off the month, and we're closing it off, starting it at a 0.52 ratio. So that's what it is. I mean, we've got a net positive of 728 listings. When you take everything that was new on the market plus everything back on the market, and then you simply subtract everything that went active under contract and pending, we're going to be at a net positive of 728 over the past 7 days, meaning inventory is going up. Now, keep in mind that anything between that 0.7, 0.75, that's going to give you that tangible increase in inventory. Once you start getting down to the 0.65 into the 0.6, that's going to give you that substantial increase in inventory. You get down to the 0.5s, and we're not going to stay at the 0.5s. This number is going to go up, but it's going to settle south of 0.7. When we're starting the day off at a 0.52 ratio, we rarely, if ever, see that jump up over the next 2 weeks into the 0.7s. We're going to settle south of 0.7, somewhere around the 0.65 to 0.69. That does put us on that really tangible / substantial increase in inventory. Now, let's take a look at the monthly. Before we do that, let's do the weekly, but year over year. Let's focus on this one. Let me make sure that the formatting is adequate for you. So take a look at this, you all. So we are already at 11.9% increase in new listings this week compared to exactly the same week a year ago. That's 11.9. The week before that was a drop of 4.4, 108 less price increases, 314 more price drops, 21 less back on the market. But this is where this number is just substantial. When you look at everything that's active, under contract, and pending, from the beginning of the year, we have not crossed the positive year over year mark. We have been lagging year over year. I'm going to ignore this past week. The average is 9.7% drop. When you look at the year over year comparison on what's pending, when you look at the new listing, the average, ignoring this week, if I were to add this week, the average is 7.2% gain. So we've got a 7.2% gain on the number of new listings, and then we've got a 9.7% loss on what's being absorbed by the market. That is why the ratio is so off. Take a look at 2 weeks ago, 0.73 versus 0.78 last year. 3 weeks ago, 0.70 versus 0.93 a year ago. 0.61 this year versus 0.8 a year ago. Really amazing what's happening. Let's take a look at the monthly. First thing we're going to do is update last month. That's going to be the month of February. Let's take a look at how many pending. That doesn't change, 1712. Let's take a look at this month, starting with active. Melanie said the gap is getting larger between the year-over-year increase in listings and the year-over-year drop in pendings. That is very, very well noted, Melanie. You're absolutely right. That gap, just every week, it's a little bit wider, which means what? Inventory keeps on increasing, right? We've got more properties coming on the market, and we've got less properties being absorbed by the market, which is why inventory is we're going to take a look at active listings. Really important for us to know this. But let's take a look at the number of new listings. We are at, oh my goodness, you all. Okay, last March, we were at 4,963 new listings. The March before that, 4,478. The March before that, 4,281. As a matter of fact, let me do this really quick. Yeah, this is kind of like being hidden, so I'm not going to do that. I'm just going to sit here. Then we've got March. Okay, so we went from 31. So these are new listings. 4221, 4479, 4963. What do you think we're on right now? This is March 31st, so we still have a few listings coming on the market between now and the end of the day, maybe about 50 or so listings. But where do you think we are right now? Just take a guess. This is the end of March. Okay, so on Austin, starting us off at a good solid 5,100. Let's do two more guesses. Okay, we've got Jason at a very, 5,395, coming in really accurate. Oh, Melanie, like 6,300. Like, it's going to be just awful. All right, so here's the thing. We are at 5,218. Now, might not seem like a lot, but we'll review some of the charts, and it's a lot. It's a lot. So let's take a look here at the number of price increases. We are at 693. Okay, well, more so than the previous month. We're going to do some chart updates here shortly, so you're going to be able to see all the charts. Price drop. Oh, wow, look at this. We're at 5721, 5721, 89%, matching last month. Back on the market, let's take a look at back on the market. Last month was 15%. What's going to be this month? 14%. That's matches March of last year. Active under contract. Let's take a look at this. We are at 2022. Now, let's take a look at pending. Oh man. Wow. 0.61. 0.61 new listing to pending ratio for pretty much the entire month. It'll go up a little bit. It'll go up to like 0.63, 0.64. It's going to be the lowest one going all the way back to July 2022. That was at 0.63. And you notice that we had 2154 active, 1746 pending. And then right now we've got 2022, 1618. The numbers aren't that far off. So even though pendings are going down, it's a fact, they're going down. What's driving this ratio so low, it's not necessarily that the pendings are just absolutely collapsing. There's still activity out there, which is really encouraging. It's this number right here. It's just the number of new listings. The gap is increasing. To your point, Melanie, we've got that 9.7% increase average on the number of new listings. So yeah, pendings are down. We've got to recognize that. But what's creating this ratio plummeting, just the sheer number of active listings and new listings that are coming on the market. That's what's going on. Let's take a look at sold. 2463, not bad. 2463, lower than last year. 2744, good improvement from last month to be expected. 522 withdrawn. That's a big number. That's a really big number. Take a look at last year, 296. We've just about doubled the withdrawns. Double the withdrawns. June 2022. Let me take a look at June 2022. Yeah, June 2022, 0.58. July 2022, 0.63. Yeah, remember June 2022? The market just absolutely hit the wall. Why is that? Take a look at the number of new listings that came on the market, 6231. Crazy. Amazing. What do you think is driving these new listings compared to years past? All right, very good question. This is what's happening right now with new listings. Number one is you have properties where they tried selling the property in past years and then they rented the property out. Let me go ahead and just update this number really quick, 272. So take a look at 2023. A total of, and we're going to go from January all the way to December. A total of 13,187 properties withdrew or expired in 2023. Not all of them were relisted in 2024. Guess what a lot of people did? And when I say a lot of people, I'm just going to throw out a number out there, maybe 30%. Because we know how many properties are vacant, like half the properties are vacant. So what happened, we can track this. And we've done this before where we took 1,000 properties that were withdrawn and expired. And then I downloaded everything that came on the market on the leasing side of things. And it came out to about 25%. People rented those properties. That's why we saw the available inventory of rental properties just go absolutely through the roof. The other thing that people did is they converted those to short-term rental. That's why that number went over 10,000 available short-term rentals in the Austin area. So then that property is off the market for the entire year. And now, or possibly even a year and a half, 18 months, depending on when they decided to put the property back on the market, which means they tried selling here, they rented it here, and guess what? Now this is round two. And I'll say from experience, 80% of the properties that I showed over the past 2 weeks, that I've previewed over the past 2 weeks, when you are previewing properties and you're showing properties, you've got to print out the history of the property. Because you know what I'm noticing? I'm noticing active, price drop, hold, withdrawn. And that was 2023. And then I'm showing active, price drop, expired. And that was 2024. And now active, price drop. That's what I'm noticing. So when you are previewing, when you're showing properties to your clients and you click on that MLS agent full page report, there's a little checkbox right there that says print rollout. And you want to print out the history so that you see what's going on. So these are rebounds into the market. That is what's happening. We also have an increase in new construction. New construction inventory is reaching record high levels in our area. So that is absolutely what's happening. And then also what I am convinced, Violet, is happening is that you've got people that bought last year, bought 2 years ago, and they bought at the under 45th percentile. They've been crushed by inflation, crushed by prices going up across the board. And now you've got taxes going up. Their mortgage payment went up because maybe the lender that worked for the builder didn't escrow based on the entire future value of the property, but they did a land value escrow. So now their monthly payment is up. And now that's like, I got to get out of here. I mean, this is just, I can't do this anymore. I do know that there's quite a few properties that are entering the market that fall within that category. No doubt about that. Those are all the reasons why we're seeing an increase in inventory. We also have a lot of properties that were rented out. They've been rented for 5, 6, 7 years. And now that rental prices are going down, maybe people took out a cash out refi on those properties, pulled some equity out of those properties. But now what are we noticing? We're noticing vacancy going up. We're noticing prices going down. And people are seeing that as an opportunity just to liquidate that asset, put that back on the market. I mean, going back to my own experience showing, previewing homes, the market that I was showing and previewing in, I'd say 20% of the properties used to be rentals. And now they're on the market, vacant homes on the market. But 20% of those used to be rentals. And I'll say this, those 20% that used to be rentals, they're like 20% overpriced. It's like, hey, landlord, there's no way you're going to get this for this property. You're now the owner. You're not a landlord anymore. House is vacant. It looks like a rental. It feels like a rental. It smells like a rental. But you know what? They're trying to get that primo top dollar because they're like, hey, this is a great zip code. This is a great area. And it's like, I'm sorry, you're competing with really, really good properties. You cannot give yours away. It doesn't matter. It's like you've got to either lower it by $150,000, 20, 25%, or this is not going to go anywhere. That's been my experience, you all. I cannot say enough the importance of previewing properties so that you are understanding the market, knowing the market, and seeing what's going on out there. Melanie said, I feel like I've gone on more listing appointments in the last 6 months than in the last 4 years. Very good point. You're absolutely right. We're seeing a record number of listings entering our own company inventory, which is great. You want a lot of listings as you're entering a market with a lot of listings. Like you want to just catch the wave. You want to just as many listings as possible. You just want to go as many listing presentations. Now, let's take a look at some charts. I'm going to move this off my separate screen. I'm going to grab all of my reports. I'm going to convert this as a PDF so that we can review all of these charts and then review some other metrics so we can be ready for the day. Ready for the day. Okay, so this is saving. now let's go ahead and just open this bad boy up. Here we have it. Right there. There's that 0.61. Let's do a year-over-year comparison. Active. We're up 17.6%. Active property, 6-county area. Travis, Williamson, Bastrop, Caldwell, Hayes, Burnett. We're up 17.6% year over year on the number of active properties. New, we're up 5.1% for the month of March. That's going to go up a little bit. Price increase month over month, or this is year over year, March year over year, March 2025 versus March 2024. We're down 10 on price increases. We're up 1,503 on price drops. Let that sink in. We got 1,503 more price drops this month of March than we did March last year. We've got 7 more back on the market, and so far we've got 680 less pending and active under contract. That's a 15.7% drop. Last month, that was a 10.8% drop. Now, take a look at the sold. Last month, February, year over year, we had a 10.8% drop on the number of pending. And then take a look a month later. We had what? So far this month, a 10.2% drop on sold. Let me start drawing some arrows here for you. Let me start drawing some stuff. Look at this. Really amazing. We have between like this 10 in December, January gets a little bit off. A 10% gain, a 2% loss on pending. And then what does that follow? When you average these two out, it's about the same, right? 5 and 6. It's about average is about the same. And then you have a 10% drop on pending for January. You have an 8% drop on sold for February. You have a 10.8% drop in pending in February. That was January. This is February. What do you have? You see how it matches? You have a 10.2% drop this month. So it's always a leading indicator, and that's why I take a look at pending so much. That's why we do the new listing to pending ratio. I also do active to sold, pending to sold. Those are all really good ratios. But last time I checked, if something doesn't go pending, it doesn't sell. And there's always going to be a lagging on the sales side of things. But that is why we can say with a very high degree of certainty that over the next 3 months, we're going to have negative sold numbers. And if we have negative sold numbers and we're dividing the number of active properties by the number of sold over the past 3 months, that's how you get months of inventory. Number of active listings divided by the average sold over the past 3 months. And the past 3 months is going down year over year. Well, what's going to happen with months of inventory? It has to go up. We not only are seeing a double-digit increase on the number of active listings, but we're now seeing double-digit decrease on pending and double-digit decrease on sold, which means months of inventory, there's only one way for it to go, and that's up. This is the difference between new and pending. If I take everything that's new on the market minus everything that is pending, we are positive for March 2,286. Wow. Look at that. That's a record high. That right there is the highest March on record 25 years. Last year, we were positive 1,344. Difference between new and pending, meaning we had 1,344 more new than pending last March. So far this March, 2286. Let me go back to this one. That is going to be 2286. We've got, let's take a look at which months are higher. We've got January 2004. We've got June 2002. We've got June 2022. We've got July 2022. And that's it. So In 25 years, we've got 4 months that have a higher number difference between new and pending. Really interesting to look at it that way. New listing to pending ratio, 0.61. Last year, 0.76. And there's where you can see the new listing to pending ratio. We have to go all the way back to 2004 to get a March with a lower new listing to pending ratio. Check that out. 2004, we had a new listing to pending ratio of 0.60, 0.48, 2003. But at a 0.61, we even beat March of 2009. That's kind of eye-opening. Higher than June of 2022 because we had so many new listings come in the market, and that was exactly at the time where the market peaked. Market peaked May of 2022, and it's like you just turned it off. You just turned off the market overnight. May 21st at 2:57 p.m., the market just turned off. That was the absolute peak of the market. Not a minute before, not a second after. There's that 0.61 ratio. Let's take a look at active listings. 12,332. 12,332 active listings. That's going to be the peak for March. Just amazing. Let's keep on going. Take a look at a few more things here. We've got active listings. Let's do new listings. I like this one. And this is what I want to remind you, is that even though our year-over-year difference is only 5.1%, you have to keep in mind that that is 5.1% on top of 4,963 new listings, which was a record high for March, 25 years. So we just beat the record high by 5.1%. And that record high was 10.8% higher than the year before. That is amazing. Number of new listings year over year, just incredible. And you can see that the cumulative new listings, we're 29% above average on the cumulative number of new listings, meaning everything that's come new on the market from January through March through right now. So far, 13,041 new listings on the market, up 6.6% compared to last year. And last year was a record high. So we're up 6.6% from last year. That was a record high. Let's take a look at a few more things. I'm going to skip back on the market. Let's focus on pending. Pending. Last month, 3,463. So far this month, 3,640. Last year, 4,320. So month over month, we're up 5.1%. Year over year, we're down 15.7%. That number is going to go up, but it's going to be negative. It's going to be negative. Year over year. We're going to have less pendings this year than we did last year. There's no way that number goes positive. It's already March 31st. No way. We would have to get another 600 pending properties reported. I get it. Realtors are really bad about reporting pending. I'd say that number is going to go up by 300. It won't go up by 600. No way. I haven't seen it happen before. Maybe everyone is lazy right now and there's this all hidden pending that's going on that we just don't know about, but that ain't going to happen. So we're going to be negative year over year on pending. So far this month, we're down 15.7. Cumulative pending, when you look at everything, every single thing that's gone pending from January to March, we're down 12.6% compared to last year. We're at 10,224. So we are, we're right there, 2006, 2007. The challenge is that when we index it for population, you're absolutely right, Melanie. Melanie said, I've been letting people know that so many of our numbers are matching 2004, 2008 perspective. You're absolutely right. And that's what I love about numbers. Numbers simply don't lie. And you can see 403 cumulative pending per 100,000 people from January to March. We're 22.8% below average. I like active minus pending. We've got 8692. I mean, really across the board. Bottom line, you all, you take a look at the sold, really across the board. We're at 0.68 ratio for the entire year. So far, 0.68 ratio for the entire year. Better than 2010, but that does match 2009 at exactly a 0.68 ratio. There's that 2009 0.68. There we are, 0.68 ratio. So let's take a look at inventory right now. And as of this morning, I can report to you a mind-blowing 14,141 active listings currently on the market. That is going to be an increase of 15.65% month over month and 23.8% year over year. 25% just about. More listings. And you take a look at this. This number is increasing. We were at 21.6 on Friday. We're at 23.8 right now. And pendings actually went down, which is not supposed to happen. It's supposed to go up. I get it. A lot of people closed on Friday. They're going to close today. But what that means, as a matter of fact, let me take a look right now while you're on this call to show you how many pendings we have right now. Right now, unlock MLS. So, yeah, just hasn't shifted, hasn't moved. Really, same number. It's going to be interesting to update this tomorrow. So we're at a 9.5% drop in pendings, activity index 23.7, which means that we're officially at 5.03 months of inventory. So you can see that active listings keeps on going up. You can see that pending listings are now going down. And you can see that the pending listing year over year change is staying right at that negative 10%, very close to the 10% mark. And the activity index is now trending down. We're down 20.5% on activity index, which means what? Months of inventory, the lagging indicator, is now going up. And we are officially at the over 5-month mark on inventory, which is really amazing. Now, out of all the 14,141 properties that are currently in the market, 46.4% have had a price decrease. Let's take a look at market cycle because, of course, prices are still going up. We've got 2 months in a row right now where prices are up. The gap is closing a little bit as we continue to close properties towards the last few days of the month. Less expensive homes do tend to sell towards the end of the month. I've been talking about the bifurcated nature of the market where the upper 75th percentile is outperforming the lower 45th percentile. That's going to draw the average price up, the median price up, even though the number of sales are down. That is what's happening. I'd say there's a time limit on that. I don't foresee that lasting another 2 to 3 months. We could very well roll into April. February, March, April, they all tend to be positive months within our very short selling season market. But then you go into May, all the properties that did not sell, did not go under contract, they start retreating on price. And then that really starts showing itself on the sold data into June, July, August. I don't see anything in the data that says that this is not going to repeat itself. I completely foresee this exact thing repeating itself. And you can see that average sold price month over month, the best month on record, it's always going to be March. We do have an average March month over month increase of 3.5, median 3.5. We're at 5.2 right now. So we are outperforming the 25-year historical average for March. Then we're going to have a positive April. When you look at everything that's currently pending and you look at the sold to list price ratio, you calculate all of that, I am forecasting a green April, that we're going to have a month over month increase in April. We're going to have a year over year increase for the month of April. Something catastrophic would have to happen for us to go negative. And then we're going to start getting some negative numbers on the month over month, on the year over year. On the median side of things, we are at $447,030. You can see that we are down 18.72% from when the market peaked May 2022. We got down to 21% negative, but right now we're negative 18.72%. So making a little bit of a progress there. You can see that 3 months in a row where prices on the median side of it is going up. Here's the not quite. We've got 3 months before January, and this is going to be the month over month, but take a look at the year over year. So far this year, we've got year over year positive 0.8%, which is really encouraging. But if today was the absolute bottom of the market and we noticed that prices did not go down from today moving forward and that prices kept on going up, then we would get back to peak market value by applying the 25-year compound appreciation, July 2029. So it will take a solid 52 months for us to return to peak value. Let's take a look at the number of sold properties. We are forecasting 2,504 sold properties within the 6-county area. And even though that's going to be a month over month increase, we've always had a month over month increase for the month of March. Always. The only time in February that we had a month over month decrease was 2021. But otherwise, March and May are the 2 months on record where we always experience a month over month increase on the number of sold properties. Year over year, we're going to be negative. And we're going to be negative very close to double digit. Now, on the cumulative sold side of things, so far between January and today, 6,287 properties have sold. And that's going to be roughly 8.9% lower than the cumulative sold properties last year. There are, as of this morning, 19,215 of us in the Austin Board of Realtors, Unlock MLS. Now, dues are due. So I foresee this number going down. I think this number is going down because dues are due. When you look at the number of sold properties per 1,000 realtors, we're at 130, which means that month over month, we're up 28.4%. Year over year, we're down 7.3% on the number of sold properties per 1,000 realtors. Let's take a look at a few more things. We looked at market cycle. We looked at market update. Let's take a look at rates. You can see the bond market right there behind me. But let's take a look at the economic calendar for the week. Here we go. This week, we've got Chicago Purchaser Manager Index coming in a little bit higher than expected. We've got Dallas Fed Manufacturing coming in lower than previous. We've got higher yield on the 3-month, but we've got a lower yield on the 6-month. I'm okay with that. Tomorrow, we've got JOLT. That stands for Job Opening Labor Turnover Report. We've got Economic Optimism tomorrow. We've got ADP, non-farm employment. This is going to be all about employment this week. All about employment. We've got some tariff stuff going on also, but we've got tariff stuff going on all the time now. We got manufacturing, but really the big one is going to be Friday. That's when we're going to have manufacturing payrolls, government payrolls. We're going to have broad U6 unemployment, regular unemployment. That's going to be the big day right there. But you can see behind me that we've got a really positive movement within the bond market, which means that we were able to capture a drop on the rate from 6.75 to 6.625. So that is very positive. We bounced up a little bit. We lost a little bit of ground here over the past 2 hours in the bond market. Too early to tell where we're going to end the day, but it is looking positive. We've had a really good Really good activity within the bond market over the past 3 days, and that right there contributed to rates going down 6.625. Hopefully, we will cross another repricing line, and it'll put us down into the 6.5. That would be really good. That'd be really positive. I will stress that that's not going to have a big movement on the market. It's not. I don't mean to be the bearer of bad news. This is not meant to be bad or good news. It's nothing to do with bad or good news. It's just a fact. Even if rates were to go down to 5.75, each individual person might experience a pickup in volume. You might have that buyer. You might have that, investor that says, okay, now I'm ready to move forward. But it's not going to be like this, pendings are all of a sudden up 25%. That ain't going to happen. You have to focus on your market. You have to focus on your due diligence. You have to focus on what you're doing to be successful. Because how long have lenders been offering incentives, you all? How long have lenders been offering incentives? What kind of incentives are lenders offering right now? You know what? Can I do a little bit of an exercise here for you? Can you spare me about 5 minutes of your time? Okay. I'm going to go sold over the past 90 days. I'm going to go property condition, new construction, to be built, under construction. Let's just focus in our area, 6-county area. Unlock MLS. Okay, we got 2,065 properties. Oh, shucks. Before I do that, I need to create a custom export. Let's go to custom export. I'm going to copy this custom export because I need the close price. I'm going to go the close price right after the list price. And then I'm not going to go repair. I'm going to go contribution, closing cost contribution. What do they call those nowadays? Buyer closing costs paid by seller. That's what they call it now. Okay, so I'm going to export this, and this is going to be new build concession. New build concession. I want the name. And tab separated is fine. Okay, so I created my new build concession. Now I can go back to that search that I did. I can make it the 6-county area. It's going to make me search again, isn't it? No, that's right there. So now I want closed. Yeah, it's going to make me search again. So we're going to go closed over the past 90 days, unlock MLS, 6-county area. Then we're going to go property, condition, new construction, to be built, under contract. By the way, what I'm showing you right now, let's figure out who's offering the biggest incentives. Who's offering the most seller concessions, and how is that influencing demand? That's really what I want to look at. That's what I'm finding out. Because it was a really fascinating article that was published by Fast Company. Did anyone read that article talking about Lennar and what they're doing in Florida and Texas and Fast Company? Did anyone here read that article? I'll go over some of that. 2065. I'm going to export. I just created that export. This is going to be the new build concession export. And this is what it's going to look like. Perfect. And now I need to open up an Excel and convert this. Save this as an Excel. So just kind of bear with me here so I can just get a new Excel document going. So here's Excel. Let me make sure it's throughout the entire screen. And then here's the data. Perfect. There we go. So I've got everything that I need right now. I've got every single thing I need. What I want to do here, I want to clean up the builder's name. Okay. And I've got a really cool little script that I use to clean up the builder's name. Let me open this up on like a separate little window right here. And I've got a really cool little spreadsheet that I created that just converts the builder's name into like a accurate way. So I'm going to grab the builder's name. I'm going to paste it here, and it's going to give me all the clean names. So it changes everything. So DR Horton. So it makes sure that it's actually perfect. So don't worry about this. This is my little trick right here to make sure the data is accurate. All right, so I've got all the information that I need. I've got the seller paid closing costs. So now I want the concession percentage. Concession percentage. If I spell stuff wrong, please forgive me. And that's going to be this divided by the actual close price. And there's the concession percentage. And we're going to go with like a full percentage right here. But what I also want to do is I want to ignore, let me move this out of the way. I want to ignore if the value is 0. So if the value is 0, then I want to actually ignore it. So I'm going to go if this equals 0, then give me blank, or else give me the actual formula. And now when I copy this, it should be, that's okay. So if that equals 0, let me remove the parentheses. Perfect. There we go. I just had parentheses wrong. Okay, so I just did a really simple little Excel formula. I said, hey, if it's 0, like, I just want to know the average concession, because what happens is that if you've got a builder and some of them, they don't offer concession, it's going to bring the entire average down. I don't want that. I want the actual average of what they're offering. That's what I want. So I want to eliminate the 0 from the equation. That's why I created this simple little formula. Like, hey, if the value of this formula equals 0, leave it blank. If it does not equal 0, then actually give me the value. So I've got the concession right here. I also want the price drop. So I want the price drop, and I want the price drop percentage. Drop percentage. So now we're going to go close price minus list price. There's that price drop. And let me go ahead and just freeze the top pane, make this bold so we can see. And I also like to make this a little bit different color so when I scroll down, you can see. Okay, so we've got the price drop percentage, which means we're going to divide this by the close price, and there's that percentage. Now, I do like to format my percentages in a way that makes a lot more sense. So this is what I'm going to do. I'm going to format this to where if it's red, it's going to be red. And okay, we're good to go on this. Let me kind of go ahead and format this on currency. I don't need decimal points. All right, so now this is perfect. So we've got our price drop, we've got our percentage price drop or percentage increase, but I'm really focused on this concession because now this is what I want to do. I want to grab all these builders and I'm going to create 2 graphs or 2 columns. I'm going to replicate these builders, but on this column, what I'm going to do is I'm going to remove all the duplicates. So I've got 98 builders left. And by the way, keep this in mind, y'all. I'm just kind of doing this on the fly. I really didn't even have a plan to do this right now. So I'm going to go and I'm going to do count if this range matches this value. So Brightland. Perfect. And so we've got builder name, total sold. So this is what this is telling me. This is saying that Brightland over the past 90 days sold 75 homes, Dior Horton 214, Lennar 243, got a private builder here, 122. So here's all the list of builders. Over the past 90 days, this gives me everything. So what I want to do now is I want to go concessions, and I'm going to do an average if formula. Average if this range concession percentage matches. Oh, you know what? It's going to be average ifs the average range, the criteria range, there's that builder, matches the criteria, which is going to be Brightland. Bingo. That's what I wanted right there. Now we have access to the builders that are offering the most concessions. And I'm going to do a if error equals, leave it blank. If there's an error, leave it blank. I don't care about errors. And I'm just going to make this a static data so I don't lose the formula. Perfect. I've got everything I need. So now you all, I can sort this based on the builders that are offering the highest concessions. And we're going to go concession, largest to smallest. We've got all these builders not offering any concession. Let me shift the cell up. And there are all your builders offering the most concessions for your clients right there. We've got prominence. Wow, 8.16. Let me take a look at a few questions right here. We've got, let me make this bigger so that I can actually see these questions. A lot of questions. There are higher incentives on complete inventory than to be built or under construction. They want those off their books. Yeah, you're absolutely right. No, did not read the KB Community in Cali Fireproof. I don't know what that's about. We've got, can you send us the result of this data? This is great to show sellers so they can see what their competition is offering. Yeah, let me go ahead and just do that right now. I'm going to click on Save As under Downloads. And I'm going to say New Construction Concession as an Excel. And I'm going to go ahead and attach it to here. So you can go ahead. There we go. Oh, it's still being used. So as soon as I close it off, I'll just go over that, but I'll send it. So there you go, you all. We've got, now let's take a look at Lennar. Look at that concession. Really amazing. Seth said, Dan, I was recently wondering if it would be possible, practical to add concessions to the market report. It seems they are so common and can make a big difference in true sales data. That's a very good point. That's a very good point, Seth. Let's talk about that. Why don't we set up a time and we can just play around with the market report and see if that's something that we want to roll out for next quarter. We can do anything we want in the market report. So absolutely. So really amazing just to see this, you all. And here's another thing to take a look at. So I've got my concession as an average if, and then I want to do this. I want to average, which is the one right? Which one is the sales price? Sales price is going to be column R. So I'm going to change this to, instead of column T, I'm going to change it to column R. And there we have it. There's a sales price now percentage right there. So you can see the builders that are offering the biggest discounts and the builders that are offering the biggest concession when it comes to actually conceding to the buyer. Does this show community specific data? I mean, you can export whatever you want. I mean, this right here includes all of the different subdivisions, but you can kind of parse out the data however, I mean, it's what I love about Excel is that you can just do whatever you want with Excel and just make it really, really powerful just to capture that data. As a matter of fact, I like count ifs and average ifs, but Violet, anyone can just kind of grab this, create a pivot table, and now you can go based on the actual concession. So you can say, hey, give me all the concessions, and I want to create a range on these concessions. Let's go ahead and, you can create a range within the concession. And let me go ahead and just add the, just let me do the builder first, as a matter of fact. I'm going to do let's grab the builder name. Okay, so we've got the builder name, and then we've got the concession, and I want this to be the average concession. So there's the average concession, builder name, and then from here you can simply add the subdivision name underneath it. So you can just grab the subdivision name. There we go. That's what I wanted right there. Let me make this a little bit bigger for you. So now we've got, and if it says no division, there's no concession. But here you can see Ashton Woods, all of their communities, and all of the concessions that they're offering within the community. Let me make this a percentage so you can see. And perfect. So there you have it. Yeah, very easy to do that. So now you can see based on the community, what concessions, what's the average concession that they're offering per community. Really easy to do this. And look at this, Double Eagle Ranch, Braun Homes. The cool thing about this is that you can double click here, and now you can see all the properties, and you can see the amount of concession. Look at that, buyer closing cost, $42,000. $42,000. Now they did increase the price by $14,000. So the reason why I bring this up, you all, is because, let me go ahead and save this. And only the people that attended this is going to have, only you are going to have this. This was just sent to you over chat. You can download this. This is a little freebie. I asked you for like 5 minutes. You gave me 10 minutes. This is a freebie. This is not a report that Dan Price is going to add to the report list. I think we've maxed out the report list. Like, I think I'm done. Between now and next year, my goal between now and January 1st of 2026 is to not add a single more report. Like, we've got all of the reports that we would ever need to be successful in this business. Do not tempt me, because if it was up for me, I'd create a brand new report every single day, and I don't want to do that. There's at one point, there's too much. So this is it. Charts, reports, nope. Melanie's like, you mean charts? I had an idea. No ideas. I refuse to accept any more ideas. Done. Okay, what's your idea? Now I'm curious. What's your idea?
Hey, Dan.
Go for it. I'm curious now.
Like, seriously, yesterday I had an idea and I was going to email you about it. And then you're like, no more. Um, so when I go on listing presentations, a lot of times I try to have the conversation about affordability as well, and how much, like, what their mortgage payment looks like the buyer who's going to buy it. And usually it like freaks them out. So, like, having a chart in affordability that shows, like, per like price point range, how much their mortgage payment would be looking like. Like, kind of how you do with the other ones, and you take, this price point with this amount down, and you just take it across the board, something like that.
So let me see here. Something, this one right here does it based on the rate at a fixed monthly payment of $3,000. And we've got this does based on the median price of the specific area. So what you're saying is just having like like 2 to 300,000, 3 to 400, 4 to 5, 5 to 6, something like
Yeah,
that.
or
And
like
then,
a yeah, or you can do like a line chart so or something like that, like have the price point as one of the points and then the how much the mortgage payment, you know, average would be for that or whatever.
okay. So in essence, what you're envisioning is something where you just have, let me kind of draw a few things right here, where we have, kind of two lines right there. And this is from, price of the house, 100K all the way to whatever, right? 2.5. And it's like, as, just like this, and this is your PITI.
Yes.
Okay, so this is your PITI, and it's like, as the price goes up, there's your PITI. It kind of goes up. So it really kind of, in essence, showing that seller like, hey, I'm saying that at your price, that PITI is 3K. In reality, people are going to buy 2.7 or something like this, right?
Yeah, just to show them because I know I have a lot of conversations and I try to have it ready already. Like, if somebody was to buy your house today, this is how much they would pay in their mortgage payment. And usually it freaks them out. Like, I can't believe somebody has to pay that much for this house. You know what I mean? And it just kind of puts things into perspective when there's less buyers for their home. It's like, well, yeah, because they would have to pay $4,000
Mm.
for something that you're paying 2,100 on, you know?
I like that. I like that a lot. I mean, that's a really good tool that you can use in listing presentations, also buying presentations and all that. So I think that's fantastic. If you could send me an email, that would be great. I did take a screenshot of this little graph that I drew, so I can have it here with me. But if you could send me an email, that'd be great. So, and what I'm going to have to do is I'm going to have to pre-program some assumptions into that, right? It's like, hey, based on 20% down, this rate, no PMI, these taxes, like I'm going to have to, just like all of these charts have assumptions built in. Like, there's no way that I could not use assumptions when creating something like that, or what I can do is I can, almost have like two different charts. Hey, one of them is going to be like that 20% down, no PMI. The other one's going to be, an FHA loan with MIP. Right. So that's going to have to be at one point, because here's the thing, I can't do PMI because this is the PMI chart. Like, and if I do PMI, then I've got to pick a PMI. Right. These are all the possible PMIs right here. PMI averages, or the PMI can be anywhere from 0.17 or 0.14 all the way to 1.5. That's the difference. 0.17 all the way to 1.5, depending on what? Depending on their credit score, depending on their loan to value ratio. So, what I do when I create PMI assumptions is I just kind of go right down the middle. I take the highest possible outcome. And that's like, you got to pick a number. I can't pick 0.14. That's ridiculous. Very few people qualify for that. And I'm not going to pick 1.5. You've got to pick something. Got to pick something. So we've got right here, most people aren't putting that much down right now. But once again, if I go PMI route, then I usually pick 0.45. That's going to be the PMI that I pick. That's right bullseye right down the middle, right? So all of these charts that do have PMI calculation built into it, and you can see, right? So we've got 15% down. We've got the PMI 0.23. 10% 0.46, 5% 0.59. Of course, FHA is a fixed 0.55. So I just pick the middle range of that down payment if I'm doing anything related to PMI, because it could be any one of the multiple different PMIs. How is this different than using a mortgage calculator? Yeah, I mean, just one graph, just having like one graph that you can be able to just explain that to a client. It's like, hey, here's the thing. This is where you paid. This is what, you're trying to sell. The reason why we get less showings because your mortgage payment is $2,000. Theirs is going to be $4,500. it's a big wake up call. It really is. It's a great idea. I love that idea. It's great. I'll put something together. It's a really, really good idea. I love that. So there you go. One last chart. No more. No more after this. The last one. Last one. Last one. Well, y'all, it is 11:10. Are there any questions? Are there any questions, comments, concerns, criticisms, complaints? Any questions? We've got a lot of
I
people
have a
that just stayed here. Who is this? This is Violet Leff, the
I have a
amazing
question.
Violet.
Who is Mr. Cooper Mortgage out of Dallas, and why did Rocket just buy
Rocket just
them?
bought them. Well, they were the ones.
9.5 billion.
Yeah, it's merger and acquisition right now. That's what
Why?
it is. Well, Rocket's going to become your de facto 90% of all loans are going to be processed through Rocket Mortgage. I mean, apparently they just clearly found a bunch of investors that are willing just to load that company up with a bunch of debt. I mean, Mr. Cooper was huge. They're massive. They're a massive, massive company. So it's a massive acquisition, massive company, and it's going to position Rocket Mortgage almost. Remember back on the loans.com? Loans.com was doing that. They just kept on buying, and then just kind of disappeared. That's the same thing that's happening right now with Rocket Mortgage. But yeah, they made that announcement, a massive, massive acquisition. But Mr. Cooper's they're the ones that had that breach where a lot of the loans their systems were completely locked up. We had closings that didn't fund for 2 weeks because of their data breach. But they're a legitimate company, but Rocket Mortgage did indeed buy them out. Oh, let me show you the article that I referenced briefly, and it's a few really interesting things. Lennar, this is specifically related to Lennar incentives. You all, take a look at this. This is amazing. So here's Austin right there, 24% increase in inventory. And there are places right here. This is exactly what I want to share with you. Take a look at this. This is just incredible. Last quarter, Lennar spent the equivalent of 13% of the final sales price on sales incentives, such as mortgage rate buydowns. 13%. For a $400,000 home, that translates to $52,000 in incentives. I mean, wow. 13%. Now, let me ask you this. Who here knows what a interested party contribution is? IPCs. Interested party contribution. Who here knows what an IPC is, an interested party contribution? If you read the Fannie Mae Originating and Underwriting Seller's Guide, they have a section there called the IPC, the Interested Party Contribution. And what that IPC says, and that's going to be this section right here. Let me pull this up for you. This is super important. I'm so glad you stayed. Usually by now, a bunch of people start logging off. Okay. Let's read this together. IPCs are either financing concessions or sales concessions. Now, this is the Fannie Mae guidebook. Okay. Fannie Mae considers the following to be IPCs. You tracking with me? Funds that are paid directly from the interested party to the borrower, funds that flow from an interested party through a third-party organization, including nonprofits, funds that flow to the transaction on the borrower's behalf from an interested party, including a third-party organization, funds that are donated. Now let's keep on reading. A lender credit derived from premium pricing is not considered an IPC, even if the lender is an interested party to the transaction. Well, what does this mean?
Is that because they charge so much and then give you a credit? Or
Okay. Well, a lender credit. Yeah. Well, if the lender gives you a credit in order to lower the rate, so a lender says, like, hey, I'm going to give you like a 1% credit. Well, that's, even though the lender might be an interested party in the transaction, have an affiliation, that's not considered an IPC. So we know what's considered an IPC. We know what's not considered an IPC. So is a builder considered an IPC? Are they an interested party? Yes, absolutely. They're an interested party. So here's the thing. Okay. The table below provides IPC limits for conventional mortgages. IPCs that exceed these limits are considered what? Sales concessions. You all, we've got 29 people on this call, and you're going to be like the smartest people in the world after we get done with this. You're going to be blown away. This is going to be like, this is like Lehman Brothers 2.0, what's happening here with builders. Like, this is huge. IPCs that exceed these limits are considered sales concessions. The property's sales price must be adjusted downward to reflect the amount of contribution that exceeds the maximum, and the maximum loan-to-value, closed loan-to-value ratios must be recalculated using the reduced sales price or the appraised value. What's the maximum IPC on a principal residence? If you are putting less than 10% down, 3%. If you're putting between 75% and 90% loan to value, so that would be between what, 25% down and 10% down, 6%. And if you're putting more than 25% down, 9%. We just went over a list of IPCs, interested party contribution, that blows those numbers completely out of the water. I mean, let me just sort this based on this amount right here. Let me go all the way down. Right here. We've got contribution of 10%. Now, look at this property. This property had a price drop of $45,000. Okay. And we had, on top of that, we had a 10% contribution. So what does the Fannie Mae underwriting rulebook say? That the sales price has to be adjusted based on that contribution. So Lennar is contributing an average of 13% concession. Do you think that they're adjusting the sales price by 13% when they're closing out these deals? We've got access to the MLS. They're not. As a matter of fact, take a look at some of these. Look at this property. On the market for $399, sells for $404, but then they do a backdoor $26,000 seller contribution. What should happen according to Fannie Mae rules that we just read? They should backtrack this number from this number, which means that the property should have reported a sold price of $37,000, not $404,000. Not my rules, their rules. They're not doing that. And you can just find, I mean, this is the majority, a vast majority. They're not doing that. And what's happening with that? What's happening with the fact that this is not being done? Well, it's artificially keeping the prices of the homes inflated by the amount that the IPC would have applied to the sales price. That's what's happening. So, and it's happening, it's not just Austin. This is happening across the entire country. A few news outlets are picking up on this. They're like, well, wait a second here. I'm looking at these closing ratios and I'm looking at, and that's where this article came from. And it's like, well, wait a second. Like, these are massive contributions. And now people are asking the question, well, how is this affecting the appraised value? And this is what they're noticing. They're like, well, the average selling price isn't dropping to the extent that they're offering these IPCs. And now they're starting to ask questions. It's like, why is that? If they're offering 13% interested party contribution, then we should notice a like reduction in the sales price when you compare the data moving forward. And they're like, we're not noticing that like reduction in sales price. And they're like, oh, they're not following Fannie Mae guidelines reporting this. They're just doing it. So I don't know what's going to happen with this. This is really interesting. It's a good article. It's worth reading this article. But this number right here, that 13%, is massive. It is huge, huge. And of course, we can see that their gross margin is going down. Why wouldn't it go down? But they're not reporting that using Fannie Mae guidelines. So really interesting thing and fascinating to see what's happening in the market right now. So 11:21, you all, any questions? Any questions, comments, concerns, criticisms, complaints? Any questions? Questions, comments, concerns, criticisms, complaints? Want to remind you all that we have our amazing broker Q&A and our awesome training on Wednesday. Be sure to join us for that. And then we have our team meeting on Friday. So do not forget our training on Wednesday, team meeting on Friday. Go ahead and take a stab at the contract proficiency. I am uploading all of the different correct contracts. That's one of my to-do tasks right here today. So I'm doing them. Can you add the link? Let me go ahead and just give you the link right here. So there's the link to the article. So there you have it, you all. So we've got a few comments. You were going to tell us about an article. Okay, yeah, that was the article right there. We've got, so there you go. That's the article. Can you add that link? So that pumps up the sales numbers and helps the stock price. Well, it's certainly, I think it convinces people to buy homes that otherwise they probably wouldn't buy. That's really what it is. It's like, no, our prices aren't going down. It's like, well, yeah, it is. It is. So that's the reality of that. Now, appraisers are going to use that concession and they're going to adjust their appraisal based on that concession. That's what the appraiser ought to be doing. But that's why it makes it so difficult for the resale side to compete with the new construction side, is when the appraiser on the resale side is adjusting the value based on that interested party contribution, but then the builder isn't and the builder's lender isn't. That's what happens. Well, y'all, 11:23, I'll get you this update. Super grateful that you joined our Monday touch point. If you have any questions, comments, concerns, criticisms, or complaints, let me know. Here to help. Otherwise, have an absolutely amazing rest of your day, and I will see you on Wednesday.